Gold prices rising Thursday. John, gold's really moving with the euro right now, but I want to focus on the inflation reading out of China coming in at 4.1%. What does that mean for gold?
Well, it's a mixed bag at the moment, Alex. I think certainly the maneuvering on the monetary side by the PBOC last year has yielded some fruit. In fact, inflation, is contracting, albeit not as much as economists had anticipated. We've only dropped about 0.1% in December. But, certainly a 4.1% inflation rate is a lot better than the 5.4% we witnessed last year. But we have to look at this as, number one, the PBOC will not take off its sharp eye from the radar on inflation and on growth, which appears to be stalling. And on the other hand, I think that declining inflation for Chinese citizens might just mean that they don't need to load up on as much gold as they did before. And to add to that, I think the recent surge in imports, and it's not a whole lot really to tally, it actually could contribute to the trade deficit in that country. And if that happens, then of course the officials would consider curtailing back on gold imports. So I say it's a mixed bag for the moment. I think the Lunar New Year is really what's playing into this recent surge.
All right, let's talk about that trade deficit surplus idea. So we're seeing China in a tight trade surplus. If it goes to a deficit or if it shrinks, why would they then decide to cut back on gold imports of all things?
Well, mainly because, as you could fathom, the exodus of funds into particularly a gold bullion import scheme would obviously contribute to that rising deficit, and that's something that China really doesn't want to stomach at a time when, Europe is teetering on recession, and the fact that China exports about 40% of its goods to Europe. So, any type of debalancing or destabilizing act would certainly convince the authorities to take some measures in one sector or another. And this would be an obvious one. Cut back on gold imports and you cut the trade deficit.
Does that mean that we're going to see a decline in imports or just perhaps a stabilization and no more big growth?
Well, I think, first of all, we once we enter the Year of the Dragon and this gift-giving period goes away, we really have to see where the slack will be picked up from, because certainly India is not too keen on importing as much as it did in previous years. But yes, I think there will be a continuing need among locals for gold as a decorative purpose and, of course, a little bit of gold as investment. So I think at least last year's levels will be sustained. And the question still remains, will it be sufficient to pick up the slackening Indian demand?